Ethereum's price is down over 40% since its high in March of 2024, lagging significantly behind Bitcoin. Bitcoin, the coin that makes up the largest portion of the cryptocurrency market, is hovering just under its all-time high, while the price of Ethereum is still around 50% below its all-time high. There's a clear divergence between Ethereum and Bitcoin, and these kinds of divergences are things that traders can exploit. But how exactly? Is Bitcoin poised to catch down to Ethereum, or should we see Ethereum as being undervalued today, making it likely to catch up to Bitcoin, something that we've seen Ethereum do in the past? In order to answer that, we need to start by looking at something called the Ethereum to Bitcoin ratio. This is a ratio that shows us the relative performance between Ethereum's price and Bitcoin's over time. When we look at the last 2 years worth of data on this ratio, we indeed see that Ethereum has suffered from quite an extreme underperformance relative to Bitcoin, losing approximately 50% of its value against Bitcoin since January of 2022. Now, if we zoom out to a chart that goes back to 2016, we also see that this is really nothing out of the ordinary for Ethereum. Here, Ethereum outperformed Bitcoin by a factor of 20, and here it fell back down by 90%. So if anything, the more recent behavior we're seeing on Ethereum is actually pretty stable, all things considered. So the question now is, which direction this Ethereum to Bitcoin ratio is going to go? Is Ethereum finally going to reverse this underperformance? Now, believe it or not, these ratios can be traded. Crypto traders very often trade from Ethereum to Bitcoin and vice versa without necessarily passing through cash. Now, why is that important? Because it means that these ratios respect technical analysis, and we can use that to understand the behavior of Ethereum. For example, this upwards trend line going back to December 2016 captures a bunch of different reactions on the Ethereum to Bitcoin ratio. All of these pivot points marked moments when Ethereum began to outperform Bitcoin after having underperformed. In other words, all of these were great areas for traders to buy Ethereum. Now you can see in early 2024, the Ethereum to Bitcoin ratio broke below this trend line. It retested it and then it failed. Ever since, we've seen Ethereum underperform Bitcoin by so far an additional 30%. But not all hope is lost for Ethereum. We can also draw a horizontal line right here that has acted as a very important pivot point for this Ethereum to Bitcoin ratio in the past. It acted as resistance right here, then it was broken, then it retested, acted as support, then it was broken, retested, acted as resistance, and then it was broken again in 2021. So we've seen this horizontal level act as a major pivot point for Ethereum in the past, and we can see that the ratio today is coming back down to test it once more. So could it be that we finally see demand come back for Ethereum here? After 3 consecutive years of relentless underperformance relative to Bitcoin, in order for that to happen, there needs to be some excitement coming back on the Ethereum network. Many crypto investors believe that Ethereum is an outdated cryptocurrency and is likely to be overtaken by newer and more advanced cryptos, like, for example, Solana. So if we want to have a complete picture, we have to look at the level of activity that we're seeing on the Ethereum network. For example, we can look at the number of transactions that are being made on the Ethereum network. That's what this chart shows us going back to late 2023. And we can see that since March of this year, we've had a pretty steady decline in the number of transactions being made on Ethereum. This has coincided with the 40% decline in Ethereum's price that we've seen over the same period of time. Now, more recently, we can see that there has been a little bit of pickup in the number of transactions being made on the Ethereum network. This could be an early promising sign for Ethereum. The pickup in the number of transactions we saw in late 2023 coincided with the moment where Ethereum's price also started to rise. So this reversal that we're seeing here could be a sign that we're seeing underlying shifts on Ethereum, perhaps something that traders could exploit with a good technical setup. We'll take a look at that in a second, but first, let's zoom out on this chart to take a look at the big picture on Ethereum's level of activity over time. This is not extremely impressive. Since mid-2020, we've seen the number of Ethereum transactions pretty much stay at the same level, and the more recent pickup in activity that we just looked at doesn't really do much to change this big picture. For Ethereum to see sustained periods of outperformance like it did in 2020 and 2021, or like it did in 2017 and 2018, we need to see more sustained pickup in the number of transactions. For now, that has yet to be seen on Ethereum. And that's the bearish case for Ethereum, because until more people begin to use the Ethereum network, this really just looks like a dying crypto. In fact, when we look at the recent price action on Ethereum, it doesn't reflect much optimism at all. Ethereum has been unable to really recover from its 40% drop since March, and that's despite the more recent pickup in activity on the Ethereum network that we just talked about. When we add Ethereum's key moving averages, we see that the near-term downtrend is clearly to the downside. This is quite a different look to the one that we had in late 2023 when the moving averages were curling upwards with the price of Ethereum trending above them. Now, if we zoom out a little bit more, however, we can identify an important upwards trend line capturing the low from June and December 2022, along with the one in October of 2023. Ethereum currently sits right above this major support. So the technical picture really puts Ethereum at crossroads today between the beginning of a bearish trend and a broader uptrend. So how can traders play this setup? Well, Technical analysis says that you can go long when price is at support, placing a stop loss below the support level that you're watching, offering a lot of potential reward if Ethereum does move higher, but limiting your risk in the event that the support level gets broken. That being said, this upward trend line is likely very closely watched by other traders, and when a level is this obvious, it isn't uncommon to see price manipulations that whipsaw inexperienced traders. Large market players have the ability to take price down through support, triggering the stop losses of other traders so that they can get a better price on it before pumping the crypto back up again. These are called stop loss raids and are very typical in financial markets. If one of these occurs, there's likely a lot of stop losses that have been placed around this region, which means the price could dip all the way down to $2,000, going through the trend line before actually bottoming out and resuming higher. That's a very typical trap. So that's for the traders who are optimistic on Ethereum. But what about if you're bearish and you believe that the crypto is going to die out? Well, in that case, waiting for price to revisit key moving averages often provides the best opportunity to go short, placing a stop loss above the moving averages. For example, we had a couple of these opportunities during Ethereum's bear market in 2022. Another way to short Ethereum is by waiting for a big breakdown below a support level to occur. That happened, for example, in May of 2022. Traders could have shorted Ethereum on the breakdown below this trend line, placing a stop loss just above it, allowing them to potentially make a 60% profit on the downside while having taken a limited amount of risk. Is it possible that Ethereum can experience that kind of sell-off following a breakdown of this trend line? Sure. It's impossible to know if you're going to get a massive breakdown or just a quick whipsaw when this kind of big level gets broken, which is why you always want to be setting a stop loss. One thing that's clear is that you need to be ready and prepared if you want to take advantage of these kinds of trades.